Hey, good afternoon. This is Trader Tim from EminiMind.com. We're doing a trade recap. Today is Thursday, December 9th, 2021, and we're going to be talking about the 30-minute range and why it's so useful for intraday trading. Before we do that, though, let's just take a peek at the larger daily chart here on the SPY. You can see kind of a rise in volume as we were making the leg down. Then we bounced off the 50, and then these last couple of days up, we've actually had a decrease in volume. So be looking for us to roll over. It'd be great if we could come down and retest the 50% retracement long, kind of make a double bottom, and then possibly bounce from there. But nonetheless, the volume's kind of indicating a little bit of a slowdown in momentum upward. Now, the other thing that can happen when you get these strong rallies like this, in a matter of 2 or 3 days, is you get a big volume spike, and then the lower volume corresponds with, kind of the flag portion of a bull flag, where you have a pole and then 2 or 3 days sideways and then a leg higher. So what I do is look for a break of the prior day's low to kind of indicate we're starting to roll over. In some cases, we can dip below the prior day's low within the bull flag and just sort of move sideways. So the last couple of days intraday have been pretty sideways, kind of these inside days, so there hasn't been a lot of follow through in one direction or another. So let's turn to the ES here. I should probably clear all this and we'll just start fresh and run through today. So the first thing I did today is I noticed that we had from yesterday's kind of high near the close down to the opening bar, its low, you kind of had this halfway back short come into play, and that held, where are we at here? That held this morning and pushed us down through most of the first hour or so. That touch of the 50% was within the first 15 minutes, so I didn't do anything up there as far as getting short. And then over here was like the third time we touched it. There was a little short here that occurred kind of right after the first 15 minutes. We touched the 50% once, twice, 3 times, but this retracement, it did break the swing low here. If you draw from this swing low to swing high, we just pierced below the 61.8, so that would have been a fine place to take a short. From there, we did have a little larger retracement short too, like this. And if you look at the distance between the 50 and the 61.8, that's, even if you take 46.89 and change, you round down and then you subtract a tick to get an 89 entry. That puts your stop at 91 outside of the 61.8. So that, as far as a short, also broke the opposing halfway back long, broke its 61.8. So that was a fine place to try for a short too. Now, one thing to take into consideration today is that our price action was inside of yesterday's range, meaning inside of the high and low from yesterday and from the high and low of Tuesday. So lots of, like I just said earlier, we're kind of in this sideways portion, the flag of the bull flag on the daily chart. So today I was, looking kind of trying to specifically look for low ticks at lows or high ticks at highs to kind of fade, kind of anticipating a bit of a range-bound day. Didn't have a ton of that until there was one kind of later in the morning that I'll get to here. If we go a little bit further to, I'll mark the first 30-minute range here and zoom back in. So these first 2 candles, that's our 30-minute low on the morning. We did have a bounce off of it. Now at this time, this is, even though the line is drawn here, it really the top of the hour was over here. So you could really kind of move the line to start after that double bottom, if you will. Like, there's not really an entry long here. We don't break the swing high, and so technically this isn't a valid long, even though it works out. I like that break of the swing high. We did get the break of the 61.8, but didn't break the swing high there for a long. In some cases, you know, rules are guidelines, and the most important thing is you want to be able to replicate your trading setup or the actual entry over and over again. So as long as you know you're breaking a rule, or your criteria is not met, that would be a better way to phrase it, you know, and you haven't hit your 2 stop out limit. If you really wanted to take this as a long, you know, you're justifying it by saying, well, we broke the 61.8, we haven't broke the swing high, I'm still within my 2 stop out limit, so, you know, monetarily I do have room to play, and maybe you observe something else that is just standing out to you, and you just, you know, you're feeling the need to have to take that trade. As long as you're not digging yourself a big hole, like you don't have 2 or 3 stop outs already under your belt, I'm okay if you occasionally, you know, do something like that. But I try to be as objective as possible. So going a little bit further into the day, this was almost at the hour mark. This gray line here is the bottom of the first 30-minute range that you see over here. We still had a little bit ways to go to the negative 23. So drew up a short like this, and look at how the 50% just lines up right with the bottom of that first 30-minute range. At that point, we came pretty close to the negative 23. Like, this low point was a 78, and that was pretty much on top of the negative 23. But having that short line up with the underside of the first 30 range was really valuable. And so took that as a short, trailed the next 61.8, and this one poked above a little bit and took me out. And then from there, what ended up happening is, so this second retracement short broke the 61.8. But I noticed that if I use that same anchor point and drew it a little bit lower to this next low point, we stopped cleanly at that 50%. So I dragged this, but at the same time we didn't hit the, well, I guess I'm getting ahead of myself. I drew from, this was the first one that I took, and then I used that same anchor point down to new lows. I don't do that very much, but just noticing that, okay, well, the market bounced and touched that 50% if I draw it this way, and we rolled over and made a new low. So I drew that up and left that on the chart. We came down here, made a new low, and being at that hour mark, you do see a lot of reversals occur around the hour mark. And so we had this little swing high break. It was only one key, but I figured, well, we're inside the prior day's range. This is what I've been looking for all day, a counter trend trade to take us back towards the open. And at the very least, you know, we can make it up to this 50% retracement, and I was kind of shooting for the underside of the first 30-minute range. So that was a nice long setup. It was kind of small, but a 76.25 was the long, and then it ended up moving pretty quickly and coming right to the bottom of the first 30-minute range. There was actually another short setup right here, a really tiny one that, had I not been in the long, I kind of like this short setup, even though the 50% doesn't line up with the bottom of the 30-minute exactly. See how we just traded in by a couple of ticks and then we're rejected So we came into the resistance and then boom, price was rejected. I kind of like that as a short. The trouble is it's a little later in the day, and when we're an inside day and it's been an hour already and we're still inside and we've made our way back kind of to the first 30-minute range, we didn't get any follow through to the downside. My thought process is, well, we're kind of getting to the latter part of the morning. If there was going to be follow through, you would have had expected it to come in already, so probably going to be sideways until the last hour of the day or somewhere around the close. So since I was already long, I didn't end up taking the short. I just trailed my stop under the swing lows on the way up. Now, one thing you might notice is this dip here. If you're trailing long, you have this pullback, but you didn't break this swing high, so I don't move my stop up underneath this low until we actually touch or break the swing high. So I had my stop actually outside of the 61.8 at that point. You get the pullback and then just kind of kept going, pulled back. So my stop is here until price comes here and breaks this swing high. Then I take it from underneath that swing low, put it up underneath the next swing low, and then keep going from there. So one important thing to kind of close each day with or each week with is, ask yourself, okay, what has been working, what's not working, and really try to put an emphasis on more of what's working than what's not. How can I do less of what's not working and more of what is? Because the market goes in these, periods of, we had a couple weeks of pretty high volatility relative to what we've seen, and now volatility has come back down. We're almost creeping into the teens again, and we're kind of in this sideways consolidation for a couple days. So you kind of have to ask yourself, okay, what's been working this week, and how can I do more of that? And then, is there anything that I noticed or an observation I made that I might want to experiment with? I like that as a question or phrase to ask yourself, because it kind of gives you permission to think critically, or be a little bit more adventurous and try some things, and keeps you focused on, okay, what worked, what didn't work, but what might work in the future, and how can I do some experimenting to see if my hypothesis might come to fruition. So that's kind of today in a nutshell. If you have questions, drop them in the comments below. I also have the masterclass available, the recording anyways, from Monday. That was a really big hit, so if you want to get a copy of that, you can shoot me an email as well. So I hope everyone has a great rest of your week. We'll talk to you all soon.